I'm here today with Misti Ushio. She's Managing Director of Harris & Harris Group's Life Science Practice. Thanks for joining us today.
Thanks for having me.
It's actually a pleasure to have you here because you used to be part of the team here at Columbia and formerly at Merck, so I think it'll be great to get your perspective today.
Sure, no, thanks, happy to be here.
So why don't we start off by having you tell us a little bit about Harris & Harris Group's investment thesis and where you see that going over the years ahead.
Okay. So Harris & Harris Group is an early stage investment company. We've been in existence for 30 years. And a couple of features that are different about Harris & Harris Group compared to other venture investors is that we're a publicly traded evergreen fund. And what that means in practice is that we have a lot of patience and flexibility as we build early stage companies. And I think another attribute is our team is quite diverse from a scientific standpoint. So you have at the PhD level biochemical engineering, physics, chemistry, material science, and genetics. And so that allows us to really tackle innovative technology in a way that I think is differentiated. So as we think about how we go forward and what we're really interested in investing in today and in the future, we think a lot about what's happening at the interface of biology and other disciplines. So what's going on at the interface of semiconductor technology and biology to expand into genomics or to enable personalized medicine and really building on all that semiconductor technology. What's going on in engineering that allows you to print cells and build tissue in a three-dimensional manner that's relevant to humans and to drug development or other medical technology, really improving patient care. And so we sort of put a bubble around this called Biology Plus. And so we're saying, we're interested in investing at this interface of biology plus other disciplines. And I think that really builds on what we've done in the past and sort of the expertise of our team and kind of where we see a lot of innovation. I think especially coming out of these multidisciplinary centers at universities that have been around for decades. They're now really producing technology that is ready for commercialization. So that's kind of one attribute.
So what kinds of companies do you see emerging from universities these days that, or from other sources, that would fit the Biology Plus model?
Okay, yeah, thanks. That's a really great question. Where we're seeing a lot of activity is the interface between semiconductor technology and biology. It's quite complicated because you have to have the chip, you have to have a chemistry layer, and then you have to have a biology layer. And so you have a lot of different groups having to come together, work together. Usually they're in different places, but when they make it work, you see really how it can make a difference. And you're seeing acquisitions in the space. Illumina purchased a company that has semiconductor technology. LifeTech now Thermo clearly has Ion Torrent, which is in the space. And I think there's more and more appreciation for how to use the existing infrastructure of semiconductor technology with biology. And I think the chemistry piece is the linker to that, and there's more and more going on in that area. I think another area is engineering and biology, and what I mean by that is how can you manipulate cells? How can you manipulate tissue? How can you build tissue? And how can you build relevant tissue? And I think there is a lot of really exciting work going on here and elsewhere, actually, where people are consciously thinking about how to engineer different organs, how do you link them together, how can you really tackle human on a chip. So it's another area. I think imaging is a third area, so with physics and IT, how can you better extract data from, say, existing CT data sets or MRI data sets, and how can you use that to either plan for surgery, use it as a diagnostic, etc.
How far away do you think we are from a world where people can have bioengineered custom joints or tissue as a sort of a practical approach to therapy?
I don't think it's pie in the sky at all. In fact, I think that there are now, because of the engineering piece where you can validate and you can demonstrate and you can reproduce cells growing on new materials, I think, clearly there's going to be FDA challenges, but I think they're tackleable, and I don't think they're 20 years away. I mean, are they 5 years away? Probably maybe more in the 10-year time frame. But look, people are doing it, people are trying, it's not a new concept. And so, but I just think the science and the fact that you have the material scientists and the biologists working together much more, in a much more collaborative way, is making that accelerate in terms of a practical commercial solution.
Speaking of accelerating these companies, one of the challenges that university technologies and other early stage technologies often face is they can be built on years worth of funding from the federal government or foundations and then stall out, for want of that last set of money, is the so-called valley of death. And in New York, a place like New York, that's compounded by the fact that there's not a tremendous amount of space outside the university research centers to go further develop this. Do you see any particular opportunities or challenges in the early stage incubator space for the kinds of technologies that you invest in?
In terms of physical space, or just in general?
Well, just in general.
So I think, and I think maybe I'll tackle New York in this conversation, because I think what's happening in New York right now is that it's on the cusp of really becoming a real bioscience hub. And I think why that's happening is because there's a convergence of, I would call, 4 factors. And I'm sure there's more, but when I think about it, I think it in terms of to have a really vibrant ecosystem, you need cutting-edge research. I mean, clearly it's the foundation of what we have here in New York City, which is, where else can you get the density of top research institutions and medical institutions producing tons of innovative technology. So number 1, done, we have that. 2 is you need entrepreneurs who are willing to take risk and build companies. I think those people are here. I think in the past they go somewhere else because the other pieces aren't here. But people are clearly critical. I think the 3rd piece is this physical infrastructure that's required to give these companies a home. They need a home, and they need a path to be able to grow, in an area, in a specific location. And then I think the 4th piece is capital. And so I think when you look at New York, and when you think about the challenges, and how do you, what will create more and more investments from our end in New York City, have the research, we have the entrepreneurs, we now have the space. And I think this, over the past several years, is really going to end up being critical in what's going to happen here. Because now you have the space that can accommodate pharma and biotech, a large pharma and biotech, and you also have the space that can accommodate, pre-company formation company, and there'll be, the in-between. And I think that's a critical piece, and then we'll see the capital. So clearly what's frustrating is that there's tons of capital in New York City, and very little of it is diverted to investing in innovation and really allowing, to your point, getting technology that's ready but very risky to move away from the university and be a part of a company. So the question is, how do you get more capital that's in New York to early stage investments, and how do you bring more capital outside of New York into the city? And I think what we're seeing and what we'll continue to see is that as there's more of these hubs, kind of physically, the physical location hubs, which is community building, it gives a place for people to be, it allows a place for investors to go, to meet the entrepreneurs and learn more about what's happening. I think you'll see that to continually expand.
A lot of the students at the university are hoping to stay engaged in startups as they go forward. And so, it's obviously it's part of the sort of cultural fabric these days that everyone wants to be an entrepreneur, everyone wants to be engaged in startups or in funding those startups or supporting those startups in some way or other. And in particular, the research scientists here, the student research scientists, often are thinking about what to do with the rest of their careers. If they don't want to stay in academia, where else can they go? As someone who's been on most sides of this question, I'm interested in your perspective. First, from your time within the academic research community, do you think was most useful to you when you made the transition to being a venture investor? And also, I'd love to hear about what is, when you first start working in the field, what's day-to-day life like?
Okay. Yeah, so a couple of questions, and maybe I'll take a step back and kind of walk through a little bit of the highlights of where I've been, because I think that'll provide some perspective. But I have a chemical engineering background and worked at Merck for 11 years. After that, I actually worked here at Columbia with you for a year, and really to dive in on IP and understand how that works, and really interfacing with the professors and the students, and how do you take that IP into something commercializable, and to interface with potential investors or potential companies that would license the IP. And then from there, moved to Harris Group, where we invest in early stage technology. And so when I think about what pieces have been really useful for, particularly investing in early stage, is I think understanding what it means to be a professor, and what that role is, and what their goals are as an academic, and as a creator of new knowledge, and how it's a little bit of a transition to think about how do I take that new knowledge that I'm creating to create a product. And I think understanding that relationship has helped sort of build strong collaborations with professors, because it's really critical at the early stages to have that relationship, and to have the professors involved, and to have a continuous stream of new technology coming into the company, to have that continue to grow, and have the technology continue to build and bring value. And I think in talking about the students, I think some of our most successful startups are where there is the grad student or the postdoc who come and joins the company, and so you have the continuity coming from the lab, but at the same time you have the mainstay professor intact at the running the lab, producing more that feeds. And so that sort of that sort of triangle of relationship is pretty effective. To sort of fast forward to the second part of your question, is what's it like day to day? It's a lot of looking at ideas, and I sort of categorize at least what I do now into sort of three categories. One is looking at new ideas, meeting people who are producing ideas, talking about new companies, giving feedback, but basically you would call it deal sourcing. I'd say part two is you're doing the deal. So once you sort of nail down the science, and you nail down the business, and you think about how much money they need and what the investment would look like, there's the part of actually getting the deal done. And that part's more a negotiation, and it's kind of a smaller time frame, but when it's going on, it's very active. And then you have a third piece, which is working with the companies, as they grow once you've made the investment. And this is usually like as a board member, really working closely with management, possibly taking on management roles, especially at the early stage. And look, it's not just we invest and go away. We invest and we help, and we're working side by side, and we're thinking about strategy. We're thinking about the trajectory. We're thinking about what are the different options that we want to create for an early stage investment. I might move a little bit and discuss this, because I think it's important when we think about building early stage companies. The challenge has been that it takes a long time and a lot of money to get early stage technology off, not just off the ground, but to a point where you can IPO and stand alone, or it can get bought. And so what we're constantly thinking about is how can you do that better? How can you do that more efficiently? And I think the other challenge with early stage technology is there's usually two different, or there might be multiple paths it can take. And so you want to maintain optionality as you build the companies, but you don't want to get too much money in before you make that decision. And so what's helpful for us is to help guide and to help understand what the opportunities are, so that we can fund it appropriately. And that's I think that's key. I think other pieces coming into this are corporations, I think, can get involved much earlier and help us determine what are the highest value experiments to do, what is the highest value market that a potential buyer might want down the road.
So do you mean partnering with like strategic investors from the biopharma industry, or other kinds of relationships?
So I think, and maybe I'll take a step back
Sure.
here. I think as we think about trends in early stage investing, or I think conversations and discussions that are happening in the area, I think there's really two discussions. One is, and again, it's around how do you do early stage investing better. One is how can you pool a sort of a syndicate together for, say, seed funding to invest in a portfolio. And the key difference between this and just a seed fund in general is that these groups tend to have, or should have, the money to then do the follow-on investing. I think the challenge of just doing seed investing is that typically these companies need more capital, and and the risk of not having that capital, I think, makes people not want to do seed investing. So I think if you can set up the two pools of money, kind of the high-risk seed money, but the growth money for the ones that are doing well, I think that's important. And so I think the conversations around that are happening around sort of incubator models. How can you do incubator models better? Is there a way to really make that successful? And then I think the other piece of that is large corporations are continually getting more and more creative about how they want to interface with early stage companies, because they want innovation and they want access to it. And I think because they're getting more creative, I think the companies and the investors are also thinking about how can we get more creative to sort of create a win-win partnership with not just corporate venturing, but even companies that don't have venture groups. How can they get involved, or how can you interface with their technology groups and these innovation groups that they have, because they're constantly trying to figure out how can we access what we need, because we're consumed by producing and commercializing and distributing and selling and making all of our products.
So before I let you go, I did want to ask one more question. If you were to give students advice, let's say they're finishing up their PhD or their master's, and they would love to, in 5 years, find themselves as an associate at a venture firm, what advice would you give them about things they could try to do now to maximize their chances later?
Okay, that's a great question. I think there's a couple things. I think one is, and I do talk to a lot of students who are thinking about non-academic careers, and one piece I always say is like build on what you've done. So if you have a PhD or you have a business degree, or, make sure the next thing you do is building on what you've done in the past. So I can speak a lot about people coming with a scientific degree or a PhD or that type, which is, I think there's a couple different directions. One is go join a startup. Getting operating expertise and understanding what it's like to really build a company is insanely valuable. And through that effort, not only do you get the experience of company building, but you also get to interact with the investors who are investing in your company. And I think building that relationship can only help you, because as you grow the company, the investors will, think about how else, there'll be other opportunities coming out of that. So that's, I think, one direction, going the company route. I think the other direction is, trying to get as much experience of how to evaluate technology from a commercial standpoint, like in a tech transfer office, how, understanding the finance and the valuation and the deal terms and the capitalization tables and a lot of the nuts and bolts that venture firms need people to understand, but it's not something you learn along the way very easily. And that's a body of knowledge that's extremely useful and will complement any other attribute and skills that one has. And then I think the third, and I think we see this less and less, but still sort of the fundamental business and the fundamental finance, will only help. So I think those are a couple suggestions. But again, I think always be building on what you've done in the past, but thinking about and being opportunistic about what opportunities come your way and taking advantage of them as you navigate. Because the one hard piece is venture in general is somewhat of a closed system, so it becomes highly networked. It's highly networked when it comes to who has openings and where are they going to fill them. So the more you can get out there and the more networking you can do and the more you can meet other venture groups or meet entrepreneurs, I think that increases your chances because these are not just going to come up on the job list.
Right. Misti, thanks so much for joining us today. I really appreciate it.
Sure. Thanks for having me.